So then guys, today we're going to be talking about Z-scores. So in this video, I'm going to break down what is a Z-score. So why I think it's quite a good valuation tool, indicator, and it's something that every investor should understand. So in this video, we're going to break down exactly what they are and how to actually use them and a couple of other bits as well. So remember, it's according to my own research. Make sure you do your own work, but hopefully this sparks some ideas and curiosity about Z-scores and how you can actually apply them. So they've been around for 200 years. So good old Carl from back in the day formalized a normal distribution, which included the bell curve of all Z-scores that are built on. So you have a -2, -3, going out to a +2, +3. However you want to kind of broadly go it. Most of the time they just do 2s, but sometimes you can broaden them out. And then they would have a normal distribution curve. So as you can see over time, they've been kind of like evolved really. So you had good old Francis introduced the regression to the mean. So he believes when something goes to a +2 or a -2 or -2 and +2, they would go back to 0. Then good old Carl formalized standard deviation. So the core building blocks of the Z-score, kind of what I've just been mentioning. And then Edward applied Z-scores to corporate finance to predict bankruptcy and all those things. When something goes too far away from its normal distribution, they will revert back to the mean. So you can already think about this. If a stock is too overextended, if it's a -2, if it's a +2, it should go back to that 0 point. So this is the maths. So there is tools on TradingView and so on where you can do like indicators and so on, which we'll get into earlier, but I wanted to break down what it is. So the value minus the mean divided by the standard deviation. So the value would be the current price. The standard deviation is how much price normally varies around that average. Average price over your choosing time period is the mean, and the result was how many standard deviations from normal are you right now. So it's like a constant moving indicator. And over time, I've got to realise that I quite like moving indicators. I experimented with yearly open, monthly opens, but they're too static. I like things to kind of move, kind of like moving averages. You know, they're always kind of evolving, always moving and keeping at a price. Yes, they're a lagging indicator, but, you know, I quite like how they're kind of always changing, but even though they are lagging. So reading the Z-score scale. So I already kind of just spoke about this. So extremely overbought would be if a stock is +2, +3. Very rarely happens. If you're looking at a stock price and you're not too sure where to buy, you could put on this indicator and put, let's have a look at here, bang. And then, okay, cool, we're at a +2. Maybe I'm going to wait until it goes back to that 0, or when it goes back to around that 0 point, I'm going to be, interested in actually reconsidering it. So you could create almost like a system where you only purchase between that -1 and the +1, and then obviously it depends on other factors. So it can almost be like a filtering process. And again, for oversold, you could think this is a great time to accumulate. You could maybe go out to a weekly or a monthly. I really want to accumulate Microsoft. We know that's been slightly bearish recently. Is that a is that a -2? Is that a -3? I don't know. Something you could do. So this is like almost like I wouldn't say you use this blindly, but you can add this in as another factor into your analysis. And you could also do it where, okay, we're at -1, we should mean revert to 0 and create a mean reversion strategy. So there's a lot of different things you can do with Z-scores, but that's like the spectrum of it. And then you've got the bell-shaped curve there, and then you'd obviously have 0 being down the middle, and then your extremes either side. So, as I've just mentioned, then Z-scores as a value signal in stock. So, statistically grounded based on the stock's own price history. So, it's not opinions, it's not earnings, it's not all this stuff. It's based on the history of the price of the stock, of the share prices, the asset price, whatever. You don't have to choose it on stocks, but I'm using stocks because for me it works quite well compared to other things. Mean reversion is real, as I kind of mentioned earlier. Things should it should mean revert around that 0. So things should start off at, let's say 0. If they go out to 2, they should work their way back. It doesn't mean that they just go like that. It means they may go to 2 and then they might go to 0, but the 0 may be higher. And that could be a good place to buy. It could be like a also confluence with a lower high, and you buy and so on. The relative value at a glance, so -2 means it's 2 standard deviations cheaper than its own historical average. So as I mentioned, could be a good accumulation zone. +2 could be, I don't want to touch this. I don't want to be. You could do even like if you're like a scalper and you're wanting to invest in short term ways, you've got a way of doing that. You could be, okay, I've got a watch list of 30 stocks and I take 2 trades a day maximum. Okay, if it's in the +2, I don't go long. Or if it's in the -2 on the daily, I don't go short. And that could be like an easy filtering process. So could be something to, and then works on any time frame. So yeah, you can do this on anything, but as I am the high time frame guy. I do prefer the kind of more medium term investing stuff. I do prefer it on the high time stuff, but you can apply it anywhere really. So oversold Z-score, as I mentioned earlier, inside an uptrend. So price above the 200-day EMA. I've been testing this out recently and it's worked really well. If the Z-score is below is -2 or below, very rarely happens above the 200-day moving average, but it does. This could be a great accumulation zone. Now, what I've been trying to experiment with, and it's worked quite well, is if you have a 200-day moving average, price goes below -1, but then that's on the daily. If you go to the 1 hour and it starts to become bullish again, that could be a good place to buy. So don't just buy, don't just like catch the falling knife. Go on a lower time frame, wait for some confirmation, and you can actually enter. And that's been something I've been researching lately, which I wanted to kind of. This is why I wanted to do the presentation, share it with you guys, because I thought that was quite cool and quite interesting. It was something I never thought of until like very recently, and something I've been researching. Obviously, you have to do it yourself, but it's just something that I've been been looking at. And then look, you can begin to accumulate, look for longs, and then you can use high time frame, pivots, price levels, and so on. You could also it could be what I've been trying to experiment with, potentially options. So maybe you buy some puts or calls in those overbought, oversold areas, and then you just play it out and see where it goes. If it expires worthless, then you're not too upset, but you could get a big trend as well. Obviously, we're in a huge stock market, bull run at the minute, so you could potentially look at what stocks aren't at the +2 and what's actually going to catch up to the rest of the market potentially. What does have maybe more room than others based on Z-score. So these are some ideas you definitely could be using. So yeah, in my research, so trends must be intact. So only accumulate in that kind of zone, but you don't want to be catching a falling knife. But as you can see, look, the trend's got to be going. Like you don't want to just go wait. You don't want to do that. Bang. Right, you don't want to do that. You want to wait until there is a bit of confirmation. So it's a prompt to look harder. So, okay, cool, we're in a -2. Or we're on the other end, we're in a +2. Okay, cool, I'm going to pay more attention to this than other things. And as I mentioned, it's an easy filtering process. And you can gradually, accumulate, or you can look at setups in that zone because there's a chance that it should mean revert back to 0. And when it does go back to that 0, okay, cool, I could mean revert. And it's something that I'm playing around with a lot, but I wanted to share this with you because it's not something you really hear about online, like Z-scores in active, or I guess mine's like medium, long-term trading, swing trading, but it's not something I've really ever heard of, so I wanted to create this video for those reasons. But there's maybe some strategies and how I've been trying to use it, like look for zones to accumulate in those discounted zones, but the trend's still intact. It doesn't happen much. I think on Amazon since 2000, it's happened like 30 times. So doesn't happen much at all. And that trend, I'm using the 200-day EMA. If it's above there and it's in an extreme, okay, cool, I'm looking to accumulate. Doesn't happen much, but yeah, something to play around with. On the low time frames, I've not looked, but could be something that's interesting. Don't feel like you have to go away and throw away your own process to start applying this, but definitely, okay, cool, something I could be considering. Or, I need a filter to filter out things to actually be interested in. Could be via Z-scores. So look, all the data reference here, that's the indicator on TradingView that I've been using by Tool1T. Tulunti, I think that's how you pronounce it, but that's what I've been using. That seemed to work the best for me because there's a lot of Z scores. So if you go to indicators and search Z scores, there's absolutely loads, but that's the one I've actually quite liked. It's it is based more for the high time frames. I believe it's like based for the 1 day, but he's got like a good description and breakdown of how he's put it together, or she. So definitely do that. Reference, kind of all the stuff here. But remember, guys, do your own research. But Z scores definitely one thing to be considering in your thing, especially as a filter, especially as like a. Don't just have it the Z score as you buy at the -2. It's not predictive, but maybe add it in if you want like another layer, or you want that like extra filtering piece. So thank you very much for watching, guys. Remember, I do have a free newsletter, so the link for that will be in the description. So yeah, check it out if you want, and I will see you in the next one.